Guys, I trust you're all doing good. It's your host, Herman, and welcome to my channel. If you are just joining us for the first time, can you like the video, subscribe, and turn on notification for more videos like this. And also do well to share to your friends and family so they can also benefit from this as well. So thanks for doing that, and let's do more together. So today I'll be taking you guys on a step-by-step procedure, a step-by-step walkthrough on why CRT fails. Why CRT fails? You've marked wherever you want to mark. You've marked the three candles. You mark them out, and it's still failing. What's going on? CRT is all about a AMD in a candle format. So what is AMD? AMD is accumulation, manipulation, and distribution. So how does that work? For you to have an accumulation, you have to have a range. So like I said earlier, I said CRT is like an AMD in a candle format. So what do I mean? So take a look at this. So let's say this is actually a first candle that we are trading, right? So take a look at this. We have this. So this is the first candle we are trading, and that's the accumulation candle. So we have the accumulation candle to be this, and something like this. I'm coming in a moment, please. So we have this candle here. I'm trying to draw the wick, and I don't know why the wick is not drawing. So now here we have the wick. So let's send that back here. So this is the candle here. I'm coming. Send it back. Visual order. Yeah, send back. Exactly. Why is it not working? So yeah, basically let's just work with that. Bring front. So let's just work with that. I don't know why it's not working there. So this is the eye of the candle, and this is the low of the candle. So what has the eye? This is the eye of the candle here, like this, and this is the low of that candle. So this is the low of that candle, right? So I said earlier, CRT is like a candle format of an AMD. Normal AMD is supposed to be like the Asian eye here, exactly. The Asian high, the Asian low, the previous day high, the previous day low. So what's normal AMD? Normal AMD is like you accumulate a particular range, then you manipulate it and you distribute. So something like this. I'm coming. So you have some series of accumulation like this. You have these highs and these lows just ranging. Then all of a sudden you manipulate it, then you close below, then you distribute that level. So the whatever that happened here is actually the accumulation phase. So this is the manipulation phase, the one that actually caused that spike in price to the first direction, then eventually distribute to the right direction. So that's what an AMD is on. So this is the accumulation. This one here, something like this. So this is the accumulation phase. So this is the manipulation phase, and this is the distribution phase. So that's just basically what AMD is. That's just the logic behind the AMD. What logic? What logic? The logic it works with is that it's going to take out people that are looking for buys here. Then it's not going to dump on them. So that's just basically what I'm trying to say. So basically, this is what I'm saying. I said candle range theory, which is CRT. It's a AMD in a candle format. So like an AMD in a candle format. So what do I mean? So this is the accumulation phase. So we have the high of the candle and we have the low of the candle, right? So you have to wait for one of these highs to go and you have a closure below. That's basically how you trade it as a newbie if you are just coming up. But there are some advanced people that there are some turtle soup on lower time frame and all of those. These are for advanced people. So if you have never mastered to a particular point in price, particular point, you've not even sharpened your skills and you've not even understand your own hedge, don't try to force things that you are not really up to. Exactly. So basically, I said, we have this eye of this candle here. We have this eye of this candle here. I'm coming. So we have this candle here. This is that candle we are looking for to trade, right? So if the candle actually sweep here and it close below, so that's like a manipulation of that particular range. So wherever it be anticipating is going to be a dump or a pump. So this in this scenario, you look for a dump like this to the downside. In this scenario, so that's basically what I'm trying to say. A scenario, you look for a dump to the downside because you've already manipulated that high. Then you look for the continuation to the downside. So how does that actually even look like? So most times, if the wick is not actually too long, you see some very obvious obvious continuation from that V-shaped key level created from this particular level. Exactly. So if the wick is not too long here, see some obvious continuation from this particular A-shaped key level created by that two candlestick, right? So you see something like this coming. Something like this. Yeah, something like this. So basically that's what I'm trying to say here. So you've manipulated this particular range, then we distributed with this level. So vice versa in a bullish scenario. In a bullish scenario, let's just invert the chart and see. In a bullish scenario, you see we have manipulated the low, then you close above, then you are going for the high. That's basically what CRT is all about in a nutshell. So don't just get it twisted, just get it straight and get it right. That's basically what CRT is all about. So let me just clear all these drawings and let's move on to chart. So for you to know how to avoid something, you have to know what that thing it is, what that thing is rather. You just have to know what that thing is. What is the rudiment of that thing? How does it work? What's the logic? What's the mechanism of that particular thing you are trying to avoid? So if you don't even know it, you can never avoid it. So that's what I'm trying to say. So now basically let's use GPNZD again for this particular scenario. So you see I said CRT works best with rejection, and also here note this: CRT works best when it is in alignment with that particular trend. Wherever you are trading, you have to know that you structure it first. Then wherever anything can actually follow after structure. You have to understand what structure is telling you. Are you bullish? Are you bearish? Are you dumping? Are you pumping? What exactly are we doing on that particular time frame? What exactly are we looking at? Where is the market coming from and where are we heading to? If you don't have a direction, bro, you can never know where to go back. You will just be following your instinct, even though you are very wrong. So have a direction, even though when you cannot proceed, you can have a route to go back and strategize and come back, right? So this is what I'm trying to say. So take a look at this. You can see clearly that GPNZ is actually very, very much bullish on a monthly time frame. It's very, very much bullish. So how did I know it's very much bullish? So just go back to your line chart to see. You see them very clearly, even though when your chart is very, very blurry on a normal chart. So you could see that okay, now we have multiple break of structure here, which is actually very, very nice on a monthly scale. So I have this break of structure there. So that's a break of structure. You can just turn on the angle tool to make your line straight here. And also you can also turn on your magnet tool. Yeah, just put it on a weak magnet. So whenever you are drawing a particular line, it's going to automatically set itself at those particular points in price like this. You could see that it's actually migrating to that particular point. Yeah, so we have multiple breaks. We add this break of structure again to the upside, and we add this break again to the upside, right? So, and if you could see, we could see that okay, now we are actually in almost all-time high price action of GPNZD. Like we are almost at the all-time high price action. So this is this level we are targeted to trade to. Yeah, currently. So we are looking for trade to that particular HAP level, right? So we are looking for to clear those liquidities. You can just check your line chart, see that there are wicks here, something like this. So exactly. So if you not pay attention to what I'm trying to say here, you see that okay, let's go back to what we are dealing with on a line chart. So here, basically, one of the things you have to pay attention to is you have to understand what the structure is saying. Are we bullish? Are we bearish? Are we dumping? Are we pumping? What exactly are we doing? So are we breaking structures to the upside? Are we breaking structures to the downside? Are we ranging? Are we completing the range? So basically, you see that we are very much bullish here and we are trading to particular key levels rather, here on this particular monthly time frame. So now what exactly are we still now looking for? First and foremost, when you open your chart, you have to make sure that okay, this chart is actually this chart I'm looking for is actually in alignment with the particular trend, that particular trend in chart. So now let's go back to the candlestick and see. So now basically you see you could have just opened your chart and say okay, this is a CRT high and this is a CRT low. You could have done that because what you know about CRT is like a candle range, then a candle actually close below, then you anticipate a movement to the downside to complete the range. That's what they told you what CRT is all about. But mind you are neglecting the fact that this actually is against the trend. This is actually against the trend. So you are neglecting that fact that this is actually against the trend. So which does not make any sense. So I said CRT works best with rejection and also work best with CRTs that aligns with the trend rather. So if the chart is not aligning with the trend, you cannot leverage on it. Don't even try it. So as you see, this is actually a very perfect example of CRT because you have this high and you have this low. So this candle actually closed below here. So second candle actually closed below here. So you might be looking for sales to take it down, But you'll be like, why is it taking me out? Even though I am looking for a sell, why is it pumping? So if you pay close attention to the price action, you see that okay now we have an SBI here, like sorry, RBS here, like a resistance broken term support on a monthly time frame, which correlates with the major trend that we are looking for, which actually a bullish trend. So wherever when you now frame your entry this way, then you now look for a CRT that aligns with that particular trend. Not just looking for a CRT before you look for a structure. Look for a structure, understand the structure before you look for a CRT that aligns with that particular structure. So these are the things you need to pay attention to and why your CRT keep failing. So these are things you need to pay attention to and you also have to be meticulous about. So let's go back and let's see. So on a weekly scale, what are we looking forward to? So you can see that this RBS is something like this on a weekly scale. On a weekly scale, yeah, exactly. So that weekly scale is something like this. So we have, even though we have an imbalance here, this is actually an imbalance here and another imbalance here. Yeah. And pay attention to this as well. If this is actually that weekly level that we marked out, see that this is actually a weekly scale. Then what extra you can see is CRT candle here. So this is CRT high and this is CRT low. Right? So the moment this candle actually closed above, then you anticipate this CRT completion here, which actually invalidates that sell you were having on a monthly time frame before now. So CRT works best with rejection, and this is like an imbalance sort of a CRT candlestick, right? Which I explained in my previous videos. If you've not watched it, just go back to those videos and try to understand those videos as regards imbalance and CRT. So just take a look at that. So what else do we have? You can see that okay, now we have all these levels. So now let's go back again on the monthly scale. I want to show you something here. On the monthly scale, we have something like this again. So this is that level. On the monthly scale, what do you have again? You have this close scale level again. That's also that buys to the upside, right? So that buys pump again to the upside. So wherever you're looking forward on a lower time frame is going to be a CRT again that aligns that particular trend or a rejection. So MSNR and CRT works in alignment. MSNR is for entries and CRT is all about your directional bias. So take a look at this. So we have this V-shaped level here, right? This is a V-shaped level created by that particular rejection in price. And what do we have? We have this CRT low here, and we have this CRT high. I talked about this in my last videos. If you've not watched it, kindly just check the end of the end tag of this video. You see it, or you check the description section. You see the link to the video as well. Yeah, or you see the tag at the right top corner of this particular video. Yeah, just check it, and when you're done, just come back to this as well. So what exactly are we looking at? So you can see that okay, now we have this V-shaped level that's also that rejections to the upside. So the moment this candle actually closed above this, your first target is going to be this high, which is that CRT high. Right? So this is the extreme one, right? So this is how you operate CRT with your directional bias, with your structure. So you will not be you will not eat that so much stop loss that you'll be like, why is this actually failing? Why is it failing? I'm marking it right. Why is it failing? No, you are marking your CRT right, but it's against the trend. That's the problem. So make sure you focus on CRT that works in alignment with that particular trend, and also it comes from a particular rejection. So now there's another thing you guys to pay attention to. So on the H12, we talked about you can actually frame entry from here, from this particular moment. I'm coming from that particular rejection here, which is in my last videos. So you just go back on a daily scale. So this is on a daily time frame. This is on a daily time frame. That V-shaped level on a monthly key level is actually an upper close key level here on a daily time frame. So this is actually that CRT low, and you see you have this. Just take a look at that. So that's CRT low. Then there are entries here in something like this. So what you did there is actually just subjecting it to the daily rejecting daily and H4 breakout. So this is a daily rejecting daily from this particular level a moment. So this is like a daily rejecting daily here. This one here is like a daily rejecting daily, then H4 breakout. So let's check H4 together to see if there's a breakout to trade, just to confirm if that zone is going to hold. That's why I'm looking for a breakout. So you don't just do things blindly. You have to do things with reasons. So take a look at this. So we have this. After this rejection that happened here, we have this breakout here, right? So this breakout that happened here. This particular breakout. So this is a particular breakout that happened here. So basically you see that okay, this breakout here, it makes more sense, right? So how do you now frame my entry? Whenever you have a rejection and you have a very long wick, try to investigate that particular wick. Is it a body on a lower time frame, or it's just a wick all through? So what was that week I was saying? So this particular week, try to investigate that particular week. Is it a body on a lower time frame, or is it just a week all through? So now let's switch to another time frame lower, like a 3 hour time frame here. See that is actually a body on the 3 hours time frame, and we have a very clear structure on the 3 hours time frame. The goal is not for you to be switching around. The goal for you is just for you to have a clear structure you can actually trade with. As long as it's same candlestick you're looking forward to, same price formation, you're just looking for a particular clear entry to take. So it's all good. So just take a look at it. So this is actually that level here, which actually makes more sense. And these are liquidity levels that we had after this break. After that break of treacherous to the upside. So this is actually our first break that was that obvious break that we had. So you can just see it on that particular line chart. So this is like an ABC pattern, like normal SBI model. Like you have this level, slip of liquidity, break of structure like this, engineered liquidity. Then after you have an engineered liquidity, what do you have? So after you have an engineered liquidity, what do you have? You have this particular level here. So you have this movement again to the upside. So that's what I was saying here, and that's exactly what happened there. So let's just proceed and let's explain why we are here again today. So here you see you can just frame your entry that way, and your SL, your TP. Somebody asked that how do you place your SL? Your SL is very, very important. In your SL placements are very, very important. So let's send this backward. Let's send this backward. Here, send to the back. Yeah. So now your SL is very, very important. Put your SL below those protected lows. What do I mean? All those wicks. This one here. Just put your SL below it. Yeah, exactly. Because for the fact that you've already given your SL enough breathing space, the fact that this actually breaks here invalidates this whole direction, then anticipate more sales against the downside. So that's what I'm saying. So here, you could have targeted this particular level first and foremost. So it's like a 6 RR, which is quite alright, right? Then you see down continuation to the upside to that level, this extreme level that we marked out. So, but there's something I need you guys to pay attention to here. There's something I need you to see on H12. So I know you might not see H12 on your time frame, but it's still all the same. You can see them on H8 as well, H4. Yeah, H4, this is H4. Yeah, exactly. You can see them on H4 as well. So you can see them on H12. All is good. Or even on a daily time frame. Let me show you. See, all is still good, right? So there's something I need you guys to pay attention to, right? Which is this. So on a daily time frame, what do you have? You have this level here, and this is like a CRT low, and it's like a CRT high. Right? It's like CRT low and a CRT high. But there's something I need to pay attention to on the H12. So take a look at this. On H12, there's something very, very important. And like I said earlier, it's not about switching around on line charts or on candlestick. It's all about you having a clear picture of what you are trading. That's basically what I'm trying to say. So take a look at what we have here. It's all same CRT structures, but at what pricing level? So just take a look at this. You might say, okay, because I see a rejection here, then let me sell. Here, I'm coming, something like this. You can frame something like this. So you'll be like, okay, now this is like a daily rejecting daily. So then let me sell from here. Like this is like a daily rejecting daily, and let's look for sales. Let's look for sale. At least we are looking for this extra liquidity to go. All these ones, I just mark something like this out or here, because we'll be like, okay, now this is like a daily rejecting daily to the downside, and let's look for sale. Let's look for something nice. Then you might look for, okay, now it's like a sell. Even though this actually works, but it's actually a counter trend. So this is actually a sell from this particular HAP level, and this is a CRT level. CRT again, like a CRT level that calls completed there. You might not really pay attention to that. You might be looking for, okay, let's look for more sales against the downside, because you see that there's a HAP level rejecting HAP level. Then look for more sales, neglecting the overall structural bias, neglecting the overall structural range. So that's what I'm trying to say. Don't just follow rules blindly. Follow them with logic. Don't just marry a particular bias. Just marry the logic. Just take a look at this. So now, if you're actually very much bullish on higher time frame. So whatever you'll be looking for is going to be a bullishness in price. Whatever you'll be looking for is going to be how to continue, how to leverage on that particular movement to the upside. That's basically your own concern. Not any move you're just trying to trade it. Not all trades are tradable. Know when to trade and know when not to trade. So that's basically what I'm trying to say. So just take a look at this. You have this here, you have this particular low here, you have this particular low here, and we have this particular high, the CRT high, right? So let's take a look at that. So this is like an inside bar CRT. These are examples of a CRT. So this is like an inside bar CRT. So what do I mean? So this CRT, this candle here, unfortunately, don't take this eye out. So this third candle actually take it out here, mitigating one of these levels. One of these levels here. Yeah. So we have this here, and we could have said, okay, now if you could look for more buyers, more entries, how do you look for entries to complete the CRT candles? This is actually that CRT you are trading, right? This is that CRT range you are trading. So how do you look for entry to complete the CRT cycle? Pay close attention to this. Pay close attention to what I'm trying to explain here. So you see, this is actually first CRT that we had here. This CRT level that tap into that particular level and closed above. Can we see any entries there? So, and secondly here, why can't this level take this eye out impulsively like this? So there's something I tell you guys in one of my videos. I said, the moment your POI here cannot take out the targeted liquidity or targeted eye, then your POI becomes a liquidity for that targeted eye, provided there is an POI below your POI. Let's say you have a POI like this. Let's say you have a POI from here and you're targeting this eye. So it could not take it out impulsively like this to the upside. Instead, this HFK level sponsored that sell to the downside. So you know that the moment you're having a reversal to this downside, you know that, okay, then my POI is becoming a liquidity for this particular end external range liquidity, provided there is another POI below my POI, right? Do you get? So let's take a look at this. Are you following? So I said, okay, let me even try to draw something so you can understand. So let's say you have something like this. Let's say we have something like this. So you have series of movements to the upside, series of movements to the upside, like this. So we have this. So pay attention to this. So we have this I. Yeah, this is your targeted liquidity. This is the wick of that particular range, and this is targeted liquidity, right? And this is the engineer liquidity, right? And this is that VCK level that sponsor this buys to the upside. This is actually a very strong eye, very strong glue rather, because why? It swept liquidity and it breaks structure to the upside. So you have this break here, and what do you have? You have this level here, right? So you could have said, okay, now this is actually what we are trading to this upside. But the moment you are seeing a rejection from this particular HFK level here to the downside, again, instead of it to break it impossibly and start to pump, then you anticipate two things. You anticipate this particular rejection here, this reaction like this, coming down for this entry, making this whole first POI a liquidity. This POI that you marked out here, a liquidity for the below POI, provided there is one. If there is no one, then you anticipate a rebound on your entry, then to the upside again. But the fact that there is one, you anticipate this, then this becomes a liquidity for that particular external range liquidity. So just try to be mechanical. Don't marry a particular bias. Just follow the logic. So I said if your POI here, this one here, cannot take out that targeted high or targeted low, then your POI becomes a liquidity for that targeted high, provided there is another POI below your POI. If there is no other POI below your POI, then you anticipate a rebound on your entry. So that's what happened here. So let's take a look at this. So if you've already shaped this particular low, then you anticipate a move to complete the CRT range. But fortunately, we have this low, high rather, sponsoring a reversal to the downside again. So what happened here is that this actually completed its CRT again. There's another CRT here, which is this high and this low. So that's the logic behind that particular thing that I just drew for you guys. So then you now look for another POI below that particular POI, which is this. Which is this particular one here. This one here. Do you understand? So which is that one there. So you see, you could now see how it's actually now moving, which is now making sense. So this is actually that CRT low here, and this is CRT high here. This above one here. Let's take a look at that, and this is the overall one we are looking for to trade. So these are the things you need to pay attention to. And mind you, there's something you need to pay attention to as well. So let's say, okay, now you've already framed your whole entry here in the first rejection that happened here, in the first CRT that actually closed above this level. You've already looked for an entry here. How do you cope here? Already see an entry here. How do you now cope? So let me show you something here. Let me show you something. So this is why I said pay attention to lower time frame price. So now let's go to H4 moment or H2. So there you can look at what happened here. So take a look at what happened here. So now take a look at this. So now if you are subjecting this to normal rejection on price, that okay, this is actually A-shape, V-shape level rejecting a V-shape level, just a random V-shape level rejecting a V-shape level, and you had another break to the upside. So you are looking forward to use this level as your POI to buy to the upside, because why? It has liquidity to hit. These are liquidity that it has. So like an equal low sort of liquidities, right? So you are looking for to take it out. You're looking for to trade it and takes this external liquidity out, right? So that's your aim, right? But there's something if you are here to, even though this actually works best because you have a sweep of liquidity here and a mitigation of a particular key level, which is here, right? Which is there. So this actually works best because all we are looking for is actually in alignment with direction of the trend. So it makes more sense, right? You're looking for a particular buying zone here. But why did it spiked to this downside? Why did it spiked so much? Like it's actually closed above on the line chart, but why is that spike there? So the spike comes back to what we explained earlier on that particular time frame in that time frame direction. So that spike, that particular time frame actually explains why the spike actually happened here. But mind you as well, if you are looking for to trade anything, always investigate those weeks on other time frames, these weeks. Investigate them on other time frame to see if their body on another time frame. So now let's go back and see maybe for 5 minutes to see if their body on another time frame. So you can now see that okay, you can see that okay, now you are now trading a body, you are trading in between a particular body of a particular key level. So now take a look at this. So you can just investigate and try to define your entry to this V-shaped key level instead of that particular level you marked out earlier on. Let's take a look at this. So these are the things you need to pay attention to in charts. These are the things you need to pay attention to in charts. So these are the reasons why your CRT fails. These are the reasons why your entry fails. These are the reasons why you're not really getting what you are looking for. It's not because you are bad. It's because you are trying to overlook some things which are very, very crucial and very, very essential in this particular strategy. So you can just put your entry here and something like this. Then your SL below this level coming. Yeah, I'm sorry. I think that magnet is causing trouble here. Yeah, why? Which level am I talking about? This one. This one, sir. Yeah. So you have this I. Yeah, at the first CRT level, we are trading to like that. That's just what I'm trying to explain there. Let's take a look at that. Yeah. So guys, if you find this video helpful, kindly like the video, subscribe, and turn on notification for more video like this. I do drop my videos all the time. So just stay tuned and grab your popcorn and sit here. So thanks for watching to the end of the video. I'm looking forward to see you guys in the next videos and have a nice day. Bye. See you all.